Okay, hello, welcome everybody. Welcome, a huge welcome. I think we're kind of blown away and beyond excited about this session today. And just, I guess, in terms of intention for the session. So this is the first of hopefully very many in a panel series that we've coined Preferred Return. And the hope for us is to bring together the best and brightest from across private equity and venture capital. And in that opportunity, tease out best practices, tease out thought leadership, learning lesson, all the good stuff, and really create a forum for all of us to kind of come together, thrive, learn from each other, things like that. With that, my name is Kale, and I head up revenue and go-to-market for Altvia. And for those that aren't as familiar, perhaps I'll just give you the quick scoop. Altvia, we are a tech company that focuses purely on private equity and venture capital. And we are on a mission, I should say, to really supercharge the entire industry with really modern technology. So it's our hope that, in a few years' time, private equity and venture capital will be known for being really at the bleeding edge of technology and tech adoption. And so what do I mean by that? We think a lot about the firm lifecycle, and we think a lot about the functions that create a competitive advantage for firms, or an edge, the edge. What's the source of the edge, as some might say? And typically this has a lot to do with how firms source investors and raise capital, with how they do deals and deploy capital, and then of course with how they engage LPs and kind of build ongoing loyalty. So that's kind of what we're about. And today the topic is virtual fundraising. And I know that this topic kind of is on most agendas right now. What's the world look like in a pandemic environment? And I think it's particularly interesting in our category because the industry is very well known for being very relationship based, and relationships that are really underpinned by crazy deep trust and by physical interactions rather, and things like that. And a lot of those strategies, a lot of those tactics have been taken off the table. So the industry, perhaps as much or if not more than most, has really had to think through, kind of new strategies, new tactics, how to excel in this new operating environment. So today we're going to jump into virtual fundraising. Huge thank you, truly huge thank you to Keith, Angela, Conrad, and Jeff, who we affectionately refer to as Doves, for stepping in and spending some time with us today. I will stop talking here in just a moment and let the panelists introduce themselves and give us a quick sense of their firm. But in terms of a general agenda for today and what you can expect, we are going to start the conversation around just kind of what happened when kind of the pandemic became a reality, call it 90 days back, in terms of the exercises you underwent as a firm to kind of recalibrate around expectations, perhaps in terms of, reducing fundraising expectations, thinking about how fundraising cycles might be drawn out, just kind of understand what you did to initially recalibrate. And then we'll step into more of the now in terms of, the strategies, the tactics that you're using to actually fundraise and get to the outcomes that you need to get to. And then we'll stop and kind of change our orientation and think about the future. And I know it's very cliche at this moment, but talk about the new normal and how you see the category, in 6 months, 12 months, 18 months from now. So that sound all right? And I can only see the panelists, but does that sound all right? Hopefully that's all right. Okay, cool. So perhaps, Angela, you want to kick us off and just give us a quick sense of your role and of Lightspeed?
Me too. Thanks so much, and good morning, good afternoon, everyone. I'm Angela Sibley. I'm VP of Investor Relations at Lightspeed Venture Partners. We're a venture capital firm investing from seed into growth stage across enterprise, consumer, and also healthcare. And we've got offices in the US, Europe, India, China, Israel, and a recently opened office in Southeast Asia. And, COVID obviously hit us in the same way as it hit everybody in the industry. We were very fortunate that we closed 3 different funds for a total of around $4 billion, actually the first week of March. Don't pretend to have a crystal ball in making that timing happen, but it was definitely lucky in terms of being able to wrap those funds up. But then we did transition to raising our fund for Lightspeed India, which is a standalone fund, which we kind of raised and then closed completely during the COVID pandemic. And definitely had to make a lot of adjustments. Firstly, we had our annual meeting planned for March 9th, so had to transition that to virtual kind of with a week's notice. And then also had these big trips planned out where we were bringing all of our LPs to India to meet with our India team, and had to transition that to fully virtual as well and navigate kind of fundraising under this new virtual life that we're all living right now. So happy to talk more about all of that later.
Awesome. Keith, you want to go next?
Yeah, sure thing. Good morning, good afternoon, everyone. My name is Keith Janowski. I'm the CFO and Head of Investor Relations for Coastal Ventures. We are a early to mid-stage focused venture capital firm. We spend about half our time to the typical down the middle of the fairway venture capital investments of Sandhill Road folks like consumer and fintech and enterprise. And then the other half of the time we do things that are more deep tech. And those are things that we say take a little bit longer for development, maybe a little bit higher technology, higher science. And those are things like Impossible Foods, Rocket Labs. So some interesting different technologies that might be a little bit more off the map than the typical company like the DoorDashes and Stripes of the world. So we like those companies too, but it's a good mix of everything. So we started fundraising for our last set of funds, which was KV7 and Seed E. We have a dual fund structure where we invest more of a $1 billion main fund and a $300 million seed fund. And we've been doing that since we started taking outside other partner capital money with KV3 and Seed A a little bit over a decade ago. And we started in June and just had our main closing in October. So it actually went quite well, surprisingly well. And I do think, a lot of things that we did in advance of actually kicking off fundraising over the past few years were definitely helpful to allow us to get to where we are because, yes, you have to rely a lot on existing relationships, et cetera, as it was tough to meet people. So glad to be on the panel today and happy to talk further.
Awesome. Thank you, Keith. Conrad, over to you, good sir.
Great. Thanks, everyone, for joining. Conrad Grosby with Insight Partners. We're a growth stage software focused investor. We've been around for 25 years. We're multi-stage in the sense that we do nothing pre-revenue, but early growth all the way up to leverage buyouts and invest in more mature software businesses. Much like the panels here, we wrapped up a fund, our flagship fund, on April 1st. So much of the fund had already been raised and the hard work heavy lifting had already been done. So we had less of an impact, but we did decide to launch a first-time strategy, the only other strategy outside of our flagship, right in the depths of COVID. So there was a lot of unknown for us, but we, I think, navigated pretty well, and looking forward to sharing, how we did that.
Awesome. And last but not least, our very own Devs.
Hi, everybody. Jeff Williams from Alvia. Originally got the start with a handful of the panelists here during the early part of my career at Greenspring Associates. So we were limited partners of both Lightspeed and Insight, and have gone on to work with Keith in a couple of different capacities since then as well. So familiar with the group. Extremely excited to have you today. But really the genesis of my time now at Alvia was largely driven by what I couldn't have anticipated would, a pandemic would accelerate, but largely just the sort of basic concept that there might be an opportunity for technology to sort of better enable the communication, the sort of planning, the sharing of information, all sorts of opportunities within the ecosystem. But certainly, from a limited partners perspective, felt like there was an opportunity to enable GPs to provide kind of better workflows and stuff like that. So here we are. We're extremely excited to have the panelists. So thank you again for me, and let's jump into it.
Right on. Yeah, and I'll just one last time just to echo that. Thank you for taking the time to participate, and thank you all to everyone who joined us. I think this is going to be a great session. So with that, I think everybody kind of alluded to it in their intros, but I think across all three of you, close to $15 billion raised across 4 funds, like literally in the heat of COVID. And I know that many of the funds, in some cases, were record raises for your respective firms. So I think while much of the industry was scratching their head saying, oh gosh, what's going to happen? You all were out there breaking records. So I think the question is, was there a step back in confidence, when things started to really kind of shake? And I imagine the answer is, of course, yes. But if you could just kind of give us a sense of initially how you thought this might impact the fundraising motion, and if you did take any kind of drastic measures out of the gate, and how quickly you realize like, okay, actually, we can still do this and we can still do it really effectively. And we think that we're going to be successful. If you could just walk us through perhaps what it was like at that point, just to kind of ground us, and then we'll step into more of what you've been up to lately. And I'll leave that one open to the floor. Someone wants to jump in.
Sure thing. I was saying, if you want to go.
No, go ahead, Keith. Go ahead, Keith.
All right. So since we started fundraising in June, we were, as you gear up for most fundraisers, you start looking, at least if you're, it's the next set of funds, right? You're investing the previous funds and you're getting to a point saying, okay, when is the right time to start fundraising for the next set of funds so that we know when to have it's set up and ready to go when you're ready to turn off the old funds and start investing into the new. So we were, trying to figure out when that timing was. And at one point in time, we're like, oh, maybe we'll kick it off in like January, February. But then it was really like, no, we don't need to do it that early. Let's wait. And obviously, we didn't know anything about COVID or really that it was going to be this way. So, the timing ended up being the timing. So we were definitely in a position to be like, okay, well, now what? Because we went from kicking it off like in that February, March timeframe to then saying, well, as you all recall, everything kind of shut down for a while there. And it all kind of came back to normal, but everyone kind of stopped investing for like a month. Like no one did anything for pretty much a month unless it was already like in the pipeline. So it kind of pushed everything back a little bit, but only by a few months. So then we started kicking off fundraising and we really said like, okay, well, like fingers crossed here. If you would have talked with me in November of 2019 and said, what do you think about your fundraise that you plan for next year? I would have said like, I'm pretty bullish. I think we're going to be well oversubscribed. We've got a lot of new LPs in the pipeline that are sizable and they're looking to invest in us, et cetera. And I think we're going to be oversubscribed by a lot. And turns out when you're in fundraising COVID and all those new folks say like, look, we're just sticking with our existing managers and just doing re-ups. Well, all of a sudden, the more I heard that, the more I started getting worried. So the end result is that, yes, we hit our target, closed the funds, everything worked out, but it did require a little bit more work and it did require a little bit more filling in some gaps with maybe some smaller folks that we had kind of met and had paid attention to, but maybe not give them as much love as some of the bigger guys, but it was good things that we did give them a little bit of love because they were important for us to have as new LPs coming in, as some other new LPs that were interested. And I think I would have put a decent amount of money betting that they would have signed up, didn't. And then there were some existing LPs that said like, hey, during this time, we're having trouble fundraising ourselves if there's a fund to fund. So we're cutting back our allocation from the previous fund. Or other people just said, hey, we're just trying to be cash tight here. So we're just going to do, 75% of our commitment for no real other reason. Then we're just going to do that across the board on all of our re-ups. So before you know it, you start having some attrition there and we need to help fill some holes. So it ended up working out. But if we hadn't really kind of build a strong pipeline into the fundraise, I think I'd still be, fundraising now rather than, effectively done back in October.
Awesome. Conrad, I know you had some thoughts too.
Yeah, I think we saw a similar experience, or had a similar experience. We wrapped up the flagship, and then eventually we decided to launch our first time strategy, which it's fairly new to the marketplace as well. So there's quite a bit of unknown. I think our calculus on it was that first we did see a big pause in allocations there in probably like March and April. And then we have a lot of public pension clients, as the denominator effect stabilized a little bit, we said, you know what, our bet was that the LP base was basically going to have a lot of pent up demand and we should just go for this anyways. And there was going to be a captive audience. And that's kind of how it played out. We officially launched this fundraise in early June, but we did a lot of pre-marketing in May. And that's kind of what turned out. It was kind of a big bet because we didn't really know. And it also reflected what our target fundraise, which was about 875, we're going to end up with a hard cap at 1.5. So we did come in much lower than we thought just to try to handicap. But I think, and this is similar for all the panels here, we've had, a lot of brand recognition in our businesses and a lot of history. And so I think we got that right. We got that calculus right, that people were going to be captive. And, credit to Zoom if the expectation was that we'd have to get on a plane and go fly and do these intro meetings and everything else, I think it would have lasted a lot longer. I actually think the fundraise, we're almost done with it now, probably got raised 30% faster because, we could all just sit there and do 6, 7 Zoom calls a day and not have the inefficiencies of travel and everything else. And then just even getting investment professionals on their calendars as well. So there was definitely a nice efficiency gain out of it. We leaned hard on our existing LPs. We certainly introduced and got new LPs to the strategy. But that's sort of at a high level how we navigated it.
Yeah, I just jump in quickly as well, and just to add to Conrad's point, that I think that there's definitely some ways that, you know, moving to this virtual world has been a lot more efficient. Like prior to COVID, we were planning to get all of our LPs on a plane to India and spend a lot of time on the ground with our team and some of our portfolio companies. But when we shifted to virtual, we were actually able to get our LPs in front of more of our portfolio company CEOs, just because we weren't limited by travel schedules or exact days. So we could do also a few different sessions across multiple days, which kind of helps with the fatigue of how much information can you really take in one day. So we were able to break it up a bit more easily. But I would say the limitation is that venture and fundraising is at its core a relationship business. Like that's behind everything that we do. So the challenge has been continuing to find ways to cultivate more natural relationships. And I mean, Zoom is great. I think we've all adjusted to it, but I think going forward, I'm continuing just to try and think about what are ways that we can still continue those relationship aspects of working with our LPs, like the dinner that you would have after you have an LP come in to do a due diligence day. Like a lot of the trust between yourself and your LP gets built through some of those more natural interactions that are harder to replicate over Zoom.
For sure.
Yeah, I just want to follow up on Andrew's point. That's really good. And something that I thought was, and I'm sure everybody experienced this too, but I think for us, like BDIR people, just being accustomed to the type of relationship building you get when you do it in person, the one surprise for me was how I think everybody thought doing Zoom was going to be completely impersonal and you wouldn't be able to develop relationships. But I think in some weird ways, seeing where people live, like what their house looks like, what kind of casual clothes they wear, their kids Zoom bomb in, there is some odd relationship building that can actually happen. We have new LPs that, for example, that came into our fund and who we've never met. I'm sure Angela and Keith probably had the same. And you do like your 15th Zoom call with them over the fundraise, and you know a lot about them. Like looking at Jeff's background here, and last time I spoke with him, he had like 9 guitars on the ground. So little things like that. I think if you embrace it, it can work for you. It's obviously not a substitute to having dinner and having that kind of connection, but there were some nice unexpected, oddities in that sense.
For sure. And in terms
I feel the need to defend the guitar point.
I can play them.
I play them. They're not rented. No, but I think that's something super interesting there. I mean, it almost felt like it was sort of what the world needed a little bit, was sort of, some gravity to like, hey, we're all just, sort of humans and stuff. But I don't want to steal a point that I think Angela was going to make, so feel free to jump in. But I do think it's extremely interesting how technology actually facilitated something that was a sort of new opportunity in which we had feared, and I suspect that there continues to be a long runway that we'll be looking at of new normals, right? As cliche as it's become, but I think back to like time at Greenspring where we would go to the annual meeting and get a bunch of information that sort of instantaneously, was like something a co-invest there. Whereas, an alternative way may have been, hey, like if we could have some of that information digitally in a sort of, interesting experience type format to consume ahead of time, it might enable, the conversation that we have at the annual meeting, to be a little bit more focused and a little bit more valuable to everybody to, make an introduction here or there. So I think on the point of kind of the technology actually enabling something when perhaps up to that point, we had all been a little bit fearful about stuff like that. We were finally just forced, we had no choice, but I think it's opened an interesting door.
Yeah, I totally agree. And I think across the board, across so many industries, COVID has just accelerated the trends that were already kind of starting to play out. And I'd say that the fundraising investor relations world is no different. I think two things I would say is that previously, at least in my world, I don't know about the other panelists, but I would either be normally meeting an LP in person or speaking by phone over a conference call. And the cultural norm of connecting a lot by Zoom just wasn't really there, which I think is, Zoom is far better than just a phone call because you get to have much more personal interaction. You can read the body language. So I'd say that that cultural norm has been totally shifted. And I think even after hopefully we're all back again in person, I'm sure we'll be doing a lot more video connection versus phone calls. The second piece is, to your point, Jeff, is that when you're fundraising, I think that there was already this trend to like push out a lot more data to LPs and analysis to put it in LPs' hands for allow them to better slice and dice your performance data. And when you're not, meeting in person for these long diligence sessions, I think getting that information in LPs' hands ahead of time and letting them do the work on their own is where we were going anyway. But I think this period has accelerated that trend.
For sure. And on that topic, and it's actually funny, coincidentally, no joke, Zoom has a big presence here in Denver. And I was on a run this morning and there was a gentleman wearing a t-shirt that said COVID brought to you by Zoom. I was like, well done. A little tongue in cheek there. I'm not sure you could wear that one in their office, but on that topic, Dubs, like just if you could comment, like in terms, I think obviously this was like the first rapid piece of technology adoption, right? Where all of a sudden households were forced to connect with parents and grandparents on Zoom, and it became like this household staple and a new medium for connectivity that was embraced almost overnight. In terms of like the patterns that you were seeing, Dubs, in terms of your interactions with IR teams and fundraising leaders, like what was the shift in their priority in terms of like, okay, we're scrambling, Zoom is helping us a lot. What were the other things that they were perhaps concerned around? Like, I know we think a lot about engagement, but could you just speak to that maybe a little bit more broadly in terms of the pattern recognition you saw?
Yeah, for sure. Well, not everybody is as fortunate as these three to sort of, have had the experience that they did, or to have the brands and the track records and what have you. In, talking to, quite a few people in the market, I think that there's just sort of a basic question that people are starting with, which is like, the sort of what do we do now is sort of, been alleviated a little bit, like, in terms of, okay, well, we can still meet and see face to face. But the very next question is still a basic one. And it's like, where do we go? Who do we, begin to attempt to talk to? And so, the technology is playing an interesting role there. I mean, it's not like, 2 years ago, you couldn't find data on people to target, that you couldn't enable quick communications, at scale and mass. Start to kind of whittle down a sort of pipeline, if you will, and then, enable an experience where you can share data and, share track record and things like that. But, I think that stuff's all, together with Zoom kind of coming front and center for a lot of people. And it perhaps like Zoom, where, it's a little uncomfortable for a while. We've been using Zoom for years, and, I can't remember that anybody ever shared their video, right? So sort of, awkward, and then all of a sudden it wasn't. And I think that's what a lot of people are kind of asking, especially in the conversations we're having, is like, how, where do you get the data? Who do you talk to? Where is that data? How do you do it without, sort of typing an email? How do you use analytics to enable, a reasonable degree of certainty that you can begin a conversation and things like that. So I think it from outside this view, and certainly these guys deserve a ton of credit for what they've done. I didn't raise capital, so I don't. Outside of this group, there's certainly I would say an even deeper kind of look into what technology can do. And again, going back to kind of previous point, that's kind of what we've sort of been expecting would happen. We just couldn't have imagined a pandemic would come along and so provide some rocket fuel towards it. So
yeah, and just kind of pull that trend forward in 3-5 years. Cool.
Yeah, I was going to kind of piggyback on that a little bit further. So, we use Altvia products. So yes, we use, the Altvia's products for our tracking of LPs, our regular LP communications with regards to fundraising. So we can track their interactions, we can, record emails, we put pictures in. So, the people that, LPs that we may not see all that often, I'll use that in advance of my, one pager before I go meet with an LP. Those are much more, call it, useful, because my assistant would hand it to me as I walked from conference room to conference room, right? And I'd be able to say like, okay, yeah, there's Mary, there's Jane, there's Jim, there's Bob, whomever, right? And that's what they look like again. So when I walk in the room, I'm not staring at 4 people and saying like, oh geez, which one's which again. With Zoom, it definitely made it easier, because typically their name would be showing up and I'd see as they join, I'd be like, oh, there's Mary, and I'm not screwing her up with Jane, right? And that makes my life a little bit easier there. we also use ShareSecure as our portal for our documents. And, you know, that part I think has worked well in the past, and it worked again this time. It's a system that a lot of other folks use as well. So, you know, it's great when no one ever complains about your technology, right? I remember, you know, call it 15 years ago when we started having more like accounting systems and things like that. I'd have LPs complain to me, be like, you're not using this system, you're using that system. Well, now I need to have another login. Well, I've yet to have anyone complain to me about having ShareSecure and having a login. They're all like, great, I've already got a login and it's easy, so I can just, you know, log on and get going again and have this data. So that works always well for us. One thing that I guess, has been a bit of it took us a little bit of time with regards to technology, and this is maybe a tip for some of the folks that are fundraising now or about to go out fundraising, is in the past, the way that we would typically handle meetings with limited partners, particularly if it was one of those ones where they're like, hey, we're coming in and we want to meet with a bunch of, you know, investing partners. I would usually do more of like a 2 to 3 hour session, right? And I would kind of sit there in the meeting and be the like hand holder. So if, you know, someone's late, I would handle the conversation. If someone had to leave early before the next person came in, I would be there. I'd pretty much run the meeting, but people would pop in. And there would always be some overlap, but it was much more natural. With the Zoom meeting, it was a little bit harder to do that. We did it a couple times, but it wasn't until it was a little bit after the fact when I was setting up meetings to be like, okay, we're going to do like a 1 to 2 hour meeting. And next thing you know, you'd have all these partners on the call just sitting there while one person spoke the entire time. And there was definitely some awkwardness there where they'd be like, oh, and Bob, you want to comment on this too? And then Bob would be like, obviously working on his email and doing other things because he's just sitting there in a meeting, you know, which is what most people do, right? You're like, oh, now it's my turn. Like, I had no idea what we were just talking about, but yes, of course, I'll turn on. Remind me what was the question again? So that part's definitely, if you're just going to now start fundraising and you haven't experienced that yet, definitely try to figure out like maybe a better plan where you're saying like, look, we have a 10 a.m. meeting and it's going to noon. From 10 to 10:30 is Bob. From 10:30 to 11 is Mary. And like, Mary, it'd be great if you join at 10:25. That way, if Bob is ending sooner, you can hop in and you'll understand what's going on a little bit. But then let Bob drop off. So that way Bob's not sitting there, you know, doing nothing. That's a little tip that I think we didn't get the first couple of calls where we had a big group like that.
Totally. All right, excellent. So I guess just to change gears a little bit and talk through maybe more the here and now and how you're thinking about fundraising motions or just engaging LPs in general and keeping them engaged. And I know, and it's wild, I think all the funds that have been spoken about to date, they were raised without a single in-person meeting. Is that right? Yeah, that's pretty wild. Okay. And I guess in terms of, you know, LP or just engagement and back on this topic of like, you know, LP relationships and finding new ways to create intimacy, albeit if it's somebody's kiddo running behind screaming and you can relate to them as human beings. I guess in terms, has your approach to LPs changed at all? Like Angela, I know you mentioned that for you, it's really about authentically understanding what the LPs are interested in. And sometimes it's co-investment, sometimes it's just access to the portfolio. But has your orientation to LPs changed at all as you step into the kind of this new period, I should say?
Yeah, I think that, you know, the past however many months it's been now, 8 months that we've been in this period, it was an opportunity in some ways to deepen those relationships to LPs. There's a lot of LPs, especially in, you know, April and May, we're really looking to understand the impact on the portfolio. So I think there was an opportunity there to step up and provide really granular information to our investors. But now we've kind of got through that initial period of like, how's COVID impacting you immediately? It's more just now about, you know, the work I'm doing is really to understand for each of our LPs, what can we do as a GP to add value to their firm over and above, obviously, just providing strong returns. So that's very different for different groups of LPs. Some, as you mentioned, are interested in co-investment. Some want access to the innovation coming out of our early stage portfolio for use within their own organization. Some of our LPs are in the healthcare space, want access to some of like the healthcare investments that we're making. So it's really just trying to kind of segment the LP base of where we can really add value to them, whether it's data or access to portfolio companies or research or just spending more time with our investment team and getting inside their brains. So what I'm working on is just really kind of, and you know, the AltVia and tools that we use in CRM are powerful in this too, to really be able to segment our LP base so we can meet them at a level that that adds most value to them.
Totally. It's kind of the perhaps we could call it the work from home effect. When you're not running around on airplanes, it allows that time and that headspace to perhaps ask a more legitimate questions like, what are you actually interested in? What are you actually excited about, right? Besides the returns, right? That's kind of obvious. Okay, cool. And in terms
I was
of
just going to add, sorry to interrupt, I was just going to add one thing, even coming from a longtime LP of Lightspeed, and a firm that is largely known for being very analytical and what have you with the co-investment program. I think that's this huge opportunity. I mean, that's what gets me excited. There tends to be this fear of like, oh no, sort of, I can relate to it, right? Like the GP, well, what are they, what might they find in the data? And I think that the LPs are coming from the perspective of like, we want to kind of find opportunities and do it, in an analytical way. And, it largely leads to everybody sort of suffering a little bit as a result. And ultimately, kind of more importantly, probably the relationship, it's not being harmed, but I think that there's a missed opportunity, right? In the sense of like, okay, I'm going to ask for the data anyway. And then you're going to sort of, kind of struggle to coordinate it and all that stuff. And I think that we saw a little bit of this with Lightspeed over the summer. I mean, being very proactive about offering, some of the track record data that historically, everybody shares anyway, but, in a sort of new kind of visual way, with analytics and maps and things like that. It's an amazing opportunity for LPs to sort of go, oh, this is amazing, right? And actually get right to the point to have a meaningful conversation sooner and without all of the fuss of sort of fumbling and taking 3 weeks to scramble to kind of coordinate that data. So certainly requires some prep, but the opportunity that gets created in the experience with LPs is amazing and probably opens up a door that may or may not have for a co-invest or whatever it may be. So.
Yeah, for sure. And we always say that the risk is that they might step into something that maybe the firm or on the GP side isn't excited about disclosing, but the benefits are that when you let an LP in that way, it's like the most engaging thing ever, right? Because they can really step in and look at things and slice and dice things, and it accelerates that whole component very quickly.
Well, the conversation that comes one way or the other is a good one, right? Like it's better to have that conversation than not to. It's probably going to be information that's found anyway, and people again are going to sort of scramble to provide it, and it's going to be painful for everybody. But might as well have that conversation. That's sort of, excuse me, like avoiding the sort of elephant in the room, right? Let's have the conversation. And it's not even always that, right? A lot of times it's the sort of glass half full of, oh, interesting. The interpretation of the data is interesting, especially for very, very analytical firms, may not always be what you expect.
Totally. So on the topic of campaigns, and I know that like traditionally just across the industry, they were usually like geographically focused, where it's like, hey, we're going to make a trip out to Boston and kind of do a tour, do a blitz. In terms of how you're thinking about structuring fundraising efforts, and if we want to label that as campaigns, I guess, could you share a little bit about your thinking now, like how you're organizing LPs into cohorts, or how you're perhaps segmenting existing LPs from potential new LPs, and how you're actually going to market and how you're creating efficiency in that process?
Yeah, I'll take a stab at that one. I think everybody has figured out that the golden goose is your existing LP base, and we've relied on that through COVID to, for support on new strategies and things like that. I when I look at it, you can kind of separate you can segment your existing LPs. You can segment prospective LPs that you spent a lot of time with, even pre-COVID, particularly pre-COVID. And then there's the brand new relationships that maybe you're starting to build where you've never met them. I think for us in this fundraise that we've been doing, for the percent of capital that we wanted to take from new LPs, it was like a double down focus on the LPs that prospective LPs that we've met and spent a lot of time with pre-COVID. And the thought there was, we just didn't know if people were going to be able to transact without actually meeting us. I think that's largely not an issue. But I still think that from a technical standpoint, it's not an issue. But from a practical standpoint, I do think that LPs will look to probably try to transact with GPs that they've been hanging around the hoop. And so we've really had a big focus there, and we've converted on that. So it's worked out nice. Eventually, we're going to have to refresh that front end of the pipeline with newer LPs. But the way our fundraise is sequenced out, we won't have to start raising until another year at least. So that's sort of our strategy behind existing versus new.
Nice. Anybody else want to comment?
I think for us, so we've just kind of wrapped up fundraising. So similar to Conrad, we're not going to be back into the market anytime, relatively soon. But for us, it's just been focusing on how can we efficiently provide updates, communication, and transparency to our LPs. And obviously, there's the regular annual meeting, but outside of that, like what more can we do to start building those relationships outside of a fundraising period? There's often turnover at LPs, so a lot of the time it's like refreshing new relationships with new coverage people. That's a little bit more challenging during COVID, when typically we would prioritize an in-person meeting. But for me, it's just been, even yesterday we did a big LP update call out that we wouldn't typically do, but we're like trying to just do more broad calls for all the LPs to get together, kind of an hour and a half deep dive on the portfolio and firm and updates, kind of like a mini annual meeting a few times a year. And then to the point where we were talking about earlier of like meeting LPs where they want to get value from us, we've started to try and do more kind of small events. So we did an event about a month or two ago just around co-investments. We're like, let's bring, our 10 portfolio companies that are the most likely candidates for co-investment over the next 6 to 12 months. And let's get our LPs that love co-investment. Let's get everybody in a room. Let's do a 2.5-hour deep session where they can hear from our CEOs and really start to do their own work and form their own opinion, so that when we have a live co-investment, this isn't the first time our LPs that might be looking to co-invest with us are, trying to really do a deep analysis of that company. So that was something that worked well. So we're just trying to do more things like that, I would say, in between the fundraising period to help grow and maintain the relationships. I think the challenge is, frankly, that I don't have the answer for this one, but what's the right format to do that? There's all these, huge amount of investment going in all these virtual conference and virtual events company. They're a bit more slick than Zoom. So we've been playing around with a few of them just to try and have more of an experience online that can be a bit different and something that can kind of stand out when we're all spending so much of every day on Zoom. So that's what we're kind of working on now, is like, what's the most effective format?
That's going to be an interesting thing to watch. I was going to add, Keith, when we had talked previously that Lightspeed and Khosla are physically not far from each other on Sand Hill Road, and both benefited historically from annual meeting season, right? Like all of your LPs are coming to you for someone else's annual meeting. And so it's going to be really interesting to see that, kind of how that takes shape. I mean, we've seen surveys and stuff that largely would suggest that most people anticipate that the sort of good that has come from this situation is likely to continue, meaning that trying to optimize the time and, meetings and all that stuff and reducing a little bit of the travel. Obviously, everybody's going to be very eager to get back onto a plane, but super interesting to watch how the sort of replacement for dynamics like that Keith had kind of talked about will come to be.
Yeah, I was going to say, Keith, yeah. You think about for Fund 7, I think you're probably thinking about the most out of the group.
Yeah, no, and I was going to ask, Angela, when you did, I have to assume on your virtual event where you did the co-investment thing, there was a lot of interaction with the LPs, but we've yet to do a virtual, call it annual meeting. And we were wondering what that would be like from an interaction standpoint. So were your LPs, did it look like they were just, doing work and had it up and not really paying attention, or were they kind of asking questions? Not the co-investment one, the one that was more just the, hey, this is our kind of pseudo annual meeting.
Yeah, that was more just of a one-way communication, that people were like typing chat questions in, but we didn't do it fully interactively. There's been a few companies that I've seen that are doing more of these like breakout rooms where you can have different groups of LPs meet, breakout with like different subject matter experts or investment professionals. That's something I'm thinking about. But yeah, it's finding that way to do the two-way communication effectively that I don't think anybody's quite cracked that in a way that's natural yet, as far as I've seen.
Yeah, I mean, it's interesting when you have an in-person annual meeting, right? You're doing your presentation, right? And then there's interaction, and you're able to somewhat control to a degree certain conversations, and if you're like, oh geez, XYZ LP is talking to that other LP and I really didn't want them to talk because for whatever reason, you can go interject and kind of save the day. But if you did some type of breakout room, one, you could definitely purposely keep them from being in the same breakout room, so that would be a good thing. But if somehow they connected and now you're trying to like interject in a virtually with trying to mute them or something like that, might be a little tougher to handle. I was more interested in just the general interaction. So if we did something like that, would it pretty much just be us presenting for an hour and talking and really, like you said, one-way communication, and then like, all right, thanks for everyone for coming, see you again soon? Or if there'd be a little bit more of a open communication type of format. So that's good to hear. Interesting. And good to hear that there's some companies, I'm going to pick your brain after you've talked to some of them and see which ones are popping up to you best that might be good for, virtual help with virtual conferences.
Keith, if it's helpful and to the audience as well, we just had our annual meeting and we sent a survey out, and I can tell you where we got positive marks on format and things like that. But what came back the most positive was, and this is kind of just general, but just kept it short. We were right under 3 hours. I think, and within that 3 hours, I think it's key to make sure that you have pace in the meeting. You have to keep the meeting going forward. I think that's probably one of the biggest setbacks and ways to lose LP's attention. So we kept it on a very fast pace. In some cases, it felt like maybe we didn't even do a topic justice that we were presenting on, but we just took this, the main focus was on the pace. And then I think getting the right mix of depth and content, that you can't go deep on everything. And so you have to just pick where you want to go deep and make sure that, that sort of balances out with the content that you want to put. And for example, we didn't do this, but we were thinking about doing it, which was to put a pre-record, the individual company updates, because once you layer that on, you're looking at like 6 hours or so. Nobody wants that. I mean, I can't imagine any LP that wants to sit in front of Zoom, or any human being that's going to tolerate it. And so you can kind of bifurcate those two. And then the last part was just we just went live and we had Q&A. I think we had 3 Q&A breaks just to kind of keep things sort of refreshed in that sense. And we took the questions right there, we answered there, and I think that was helpful. We used a wide variety of speakers for it. The survey came back. I think it was 91% were satisfied. But I thought the interesting stat was that we asked them if they wanted to do it virtual or in person going forward, and it was basically split. It was 53% said we should keep going virtual, and 47% said they wanted to go back in person. One person commented, said it's the only way I can get to New York, throughout the year. So not that that's a great reason, but we're happy to host. But I thought that was an interesting, maybe stat to share with you guys.
Yeah, I think that's really interesting because we, as I mentioned at the beginning, we pivoted our annual meeting from in-person to virtual within a week in March. And we had, I think, 200 LPs registered to attend in person. And when we pushed it virtually, we had close to 400 LPs on the call. So we just actually reached a ton more people by offering this. So I think no matter what, there'll be a virtual component because we've just realized that there's a lot more people that you can reach. And I don't think it's going to, when we're all back in person, I don't think it's going to dissuade some, the key contacts from coming in person because they want that interaction. But offering a dual option, I think, is probably the way that things are going to be going forward.
For sure. Yeah.
Well, one benefit of it too, sorry to interrupt, is, and again, it's sort of the thing that the technology I think can offer, and which, is sort of obvious, but is less front and center, is like, doing the thing virtually or doing it in person, but providing, a sort of digital way to refer to that. By the way, Conrad, we do support video, and we've seen a lot of increased activity in people recording, portfolio updates or annual meetings in our portal product that Keith had mentioned, ShareSecure. And we started getting feature requests for like, can we speed up watching this back, which would tend to corroborate, don't do 6-hour videos. But one way or the other, whether you do them in person and record them, I mean, there does start to enable this new sort of thing that I suspect y'all are very interested in, which is like, now we can start to measure how it's being engaged with, right? Like we can see if the person didn't attend, like, what they're looking at, like, are they viewing the materials, and start to develop, a sense for like, maybe we need to, kind of have a conversation, or we can use that sort of thing, whether they watched it or whether they didn't, as a conversation point to begin to talk about something. So really interesting. And again, I sort of look at all these things and think, wow, like, there's something that may enable that might actually create a bunch of opportunity as well.
Yeah, for sure. And just a quick thought on that too is like actually using the engagement and pattern recognition to understand what LPs want to engage with to inform communication strategy and just messaging on a go forward basis. And something else that we got really interesting feedback around was actually sequencing information leading into any type of large scale gathering, and then using the engagement to actually decide what you include in the larger scale formats, so that you can kind of give bite-sized things to firstly support comprehension, so that you don't just hit LPs with like a 4-hour kind of information download, but also to inform what ends up making it to kind of like the main stage, if you will. So it's interesting. If engagement's the first thing and just kind of being able to measure it, the next piece is pattern recognition, because it can inform everything from there. So cool. So on the top, we're getting a few questions actually trickling in here. So I definitely want to make sure that we get to those. They're just kind of while we're on the topic. So in terms of, and I guess we'll probably, oh, wow, we only 12 minutes left here. So we probably better start to shift our perspective and start to look more forward. In terms of 2021, and I know that kind of sounds crazy to even think that 2021 is right around the corner right now, but and I think a specific thing that's mostly on a lot of people's minds is in terms of like these annual investor summits, or just some type of routine kind of anchor to your LP engagement. Are those going to be hybrid strategies? Like, have you formalized a thought process for that stuff? Is it going to be part virtual, part physical? I guess it'll depend if the steakhouses in Broadway are open in New York, Conrad, but can you give us a sense of how you're thinking about that stuff?
Yeah, I mean, it's really early to tell. I think it's going to be all virtual for us for a long time. We haven't even been back. There hasn't been, I think, a single employee that's been back in our office on a full-time basis. So, and that probably isn't going to happen for a while. It'd be great to mix the two. I think as people that travel a lot, it's nice to get a little bit of a balance there. I just don't know, if people are actually really going to take in-person meetings, if it's even required for a while. So I don't know, if you think about all of our, all of the preferences for kind of our work environment going forward, and having that somewhat be work from home and maybe some office, that just means more people are going to be out of the office. I just don't think we're ever going to go back to a fully in-person environment. And quite frankly, I think the mix is probably the right answer somewhere in a mixture of it, because you can get the efficiency gains and the balance of work life by working home, and but also we all want to go back into the office and collaborate a little bit better, etc. But to answer your question, I think we're just all virtual indefinitely.
I was going to say, at best case, could be, what was it, 53% virtual, 47% physical. Cool. And
for us, I was just going to say, we're going to be fully virtual in March for our next annual meeting. And actually, one thing we're thinking about is we inadvertently had to pre-record some of our content last year because our international partners couldn't fly in, and it was going to be too technologically challenging to have everyone live streaming. But whether we can actually pre-record portions, but in a way with like super slick production to make it really engaging, and actually just kind of upgrade the level of the content we're able to put out through kind of pre-recording some of it in kind of a innovative way. So that's what's on my mind right now.
And if I can ask real quick, and I know this is a tough question to kind of distill it down to a few things, but I know your camp, perhaps more than anyone, had to like really abruptly pivot to a purely virtual setting. I guess, was there one or two learning lessons that stood out for the folks who might be stepping into a mostly virtual thing for the first time? I know that's a zinger.
That's a tough one. I would say that it actually, like, a lot of the speakers, actually preferred it. They were able to like have their notes more. We were able to have like an auto cue there that they were able to read from in a way that made it really naturally look like they were just like speaking off the cuff. So I think that, actually a lot of our speakers probably preferred it.
Okay. So then perhaps maybe you can be more selective or broaden the scope of the speakers and right in the audience of the LPs. I was talking to Dubs as we were kind of prepping for the call today that I haven't participated in a panel like this of this scale that's purely virtual. So it's like strange. I was like, I got the jitters a little bit, but not really. It's kind of like another Zoom call. So I can totally relate that way. But Keith, did you have something you wanted to add? on just like the topic of kind of like a shift to virtual, how you're feeling about that?
Yeah, so we've yet to do anything virtual in a wide scale. We actually purposely decided that for the fundraise, we thought it would be better to have like one-on-one calls with LPs rather than doing something on a larger scale, or whether it was a full, like everybody, hey, we're doing a meeting. So we thought it'd be better to do more one-on-ones. And we spoke with various LPs and they kind of gave opinions. They're like, yeah, I actually think I prefer this better than if I was one of 10 or 20 or 100, right? So I think that was fine with fundraising. We were supposed to have we actually don't have an annual meeting. We do typically have what we call a KB Summit. It is not every year though. It's more like every two out of every 3 years. So we did have one planned for May of 2020. It didn't happen. We do not plan on having it in May of 2021. So it's currently scheduled for May of 2022. If we do something then it would be virtual, I think, because I don't think we would try to cobble something together in the event like, hey, fall of 21 is now open for business and we can go travel and that people can travel to see us, et cetera. Well, I think we would just say, look, we're doing the thing like we normally do in May. Everyone's coming. We'll be in the clear by then. Let's just do that. But we may do something virtual. So that's the reason I was asking about, some of the questions to Angela and some things around what Conrad was saying, because it's interesting to me. We want to make sure we stay engaged. I do think that's important. We're actually fundraising another vehicle right now. So I expect and plan and hope that we'll be closed in Q1. So, there's not call it like a need necessarily to have something that as like a promotional item, but I do think staying engaged with your LPs is extremely important. And that's what we, have touched on in the past. And, before I joined COSA, I used AltVia and ShareSecure at my old firm, TCV. And when I came to COSA, I saw that we needed to kind of up our systems and do a better job of actually tracking LPs and understand what they're looking at and all those things. So that's why I installed AltVia and ShareSecure at COSA, and it's been hugely beneficial. And it's beneficial to make sure you stay engaged, keeps your notes of what you've had, ensures you have good conversations with people of what you spoke about last time and the things that they're interested in. And then on a deeper level, when you're actually fundraising and using the data room, I can see what they've looked at and when they've looked at it. So if I'm talking whether it's a new LP or an existing LP, and they're like, oh great, you're fundraising, okay, we'll get to work. And then 2 weeks later, I haven't heard anything from them, and I can go in and take a look at ShareSecure to see what they've looked at, and I'm like, oh, they haven't logged in yet, so they haven't looked at anything, and I can send them a ping and be like, hey, just checking in to see how things are going, see if you have any questions now that you've entered the data room. I immediately usually see some level of now they're in there and they're working away on stuff. So it allows me to kind of keep track of them, help guide them throughout the process a little bit, and make sure I kind of can crack the whip on them a little bit if they're falling behind, or if they like get my email and then really like still don't engage. Well, now I kind of have a feeling like, maybe they're not that interested this time around if they're new or if they're existing, or maybe this new LP that I thought might be a lead is not. So all that little insight is helpful to see like where should I spend more time on and who should I really concentrate on to make sure that I hit my numbers for my close.
For sure. Or just on the other side, when there may be somebody who you kind of forgot about and you step in and like, oh my God, they're looking at everything. So pick up the phone, like, hello, how are you?
Yeah, and there's 100% been people that have come back from the dead that I like, I pinged, they didn't reply to me, and I'm like, oh, whatever. And then 3 months later, they're emailing me and I'm like, what? This guy? And then I go look and they were just in the data room, like in the past week, downloading everything, looking at everything. And it's like, wow, they're not just like checking in. They are 100% engaged. And then next thing you know, like if I didn't have that data, I might, blow off that email a little bit more. So
for sure. Well, the
very helpful.
Moment of truth here, because we only have a few minutes left. If we could go around the bend, and I guess I know this is a tough ask too, but if you could just distill down, one piece of advice, one thing that you think would be extraordinarily useful for the audience, a silver bullet, if you will, when we could just go around and we'll wrap with that. Dubs, you want to start us off, my friend?
I will, yeah, because I'll go back to a point that Keith made. I mean, he mentioned how with our portal product ShareSecure that they rarely hear from LPs forgetting passwords, and we were actually really kind of taken aback when we first launched that product, and the GP customers were like, well, we're not really hearing anything. We got a little worried, and then all of a sudden it became clear that it was a good thing not to hear something. And so the point that I want to make is it's a relationship business that's never going to change. But there's an amazing opportunity for technology to play a role here, in an elegant, sort of pleasant experience for LPs and for prospects. Obviously provides leverage and allows you to do more with less for your internal operations. But I think, in the consumer world we live in, especially in financial services, amazing opportunity to kind of have a wow moment, sharing information, sharing data, take advantage of it.
Awesome. We'll just go around my little Zoom pane here. Conrad, you want to jump in?
Sure. I don't know if I have a silver bullet, but I think as I'm just looking back and where we've had some success and like with the general philosophy of, we sat down and before this fundraise and as a group, we just kind of collectively said, I think this is a time where you can be really rewarded for just trying new stuff. The environment is very fluid and nobody really knows what's going to happen. And we're still in that environment. We could be shut down here pretty shortly, and there could be a vaccine shortly after that. We just don't know. But I think where we've taken chances on things, trying new things, whether it be small things like we all did a bunch of Zoom happy hours, but even trying little variations of that, all the way to, I'm sure what Andrew is doing on the, just the interesting content, being spread across the LP base. And I don't think you lose if you try something new, even if it doesn't work out. And I think the appetite for LPs to get something different, they're just more open to it. So you could have some outsized outcomes in terms of trying stuff new. Or I think if you look in the past when we were just, it was the same thing over and over. You didn't really take as much chances as you think you did when times were normal, where you can actually take them now and see a bigger result. So I know that's not specific, but one can think about their own business and their own budgets and their own this and that and try things around. And I think it's definitely rewarding.
It's like things are weird. Try something weird. It's either going to work or no one will notice. Just like, oh, that was kind of weird. But Angela, you want to jump in?
Yeah, I would just say from my side is really just to take the time to cultivate and develop really authentic personal relationships. I think that 2020 has definitely actually provided an opportunity to do that. Just to genuinely ask, like, how are you doing? How are you dealing with this crazy year that we're all experiencing? And I think the other part is that just comes through transparency. And so I think that's a really key way to kind of continue to deepen relationships. And I think that even if you've got, a strong re-up rate from your existing LPs, you never know like what's in the future. So it's always good to just, when you might need help from an LP in the future. So it's always good to invest in those whenever you can.
Awesome. Last but not least, Keith.
Yeah, I would say the management of, assuming that we're going to be doing this virtual thing for a while, at least still for a little bit longer here. As I touched on before, kind of the management of the meeting virtually is very important. And one of those things is like, so myself and our COO, a lot of times we'll tag team a lot of meetings here. And I noticed when there were occasions, like, to be honest, yesterday I had some internet issues, so I was just dialing into calls. We definitely had some fits and starts versus working together with like the way that we would present. So normally, like, I'll say something, then he'll piggyback on. But when you're in a video, you can see when like he's going to start talking, so you know when to kind of shut up, and vice versa. But if I'm just on the phone, we had a couple times where it was like, oh, okay, you go ahead. No, all right, now you go ahead. And it definitely just led to a bit of like an awkward like conversation instead of it being more of a smooth meeting. And I encourage that of the, like your general partners that are going to be joining the call as well. My experience is a lot of them put this as like a secondary thing. So they'll, end up doing it while they're, hopping into a Starbucks to grab a coffee, and they're kind of like, you hear the background noise while they're moving around and all this other stuff. So definitely encourage them to like sit at a desk, don't be moving around, don't have your laptop on your couch with the video staring up at your nostrils, brush your hair that day, get a haircut, things like that. Try to be as like it's a real meeting in the office as much as possible, and it'll come out much smoother, much more professional. I think we're all willing to accept like, hey, I'm wearing a t-shirt to a meeting. That's cool because I'm sitting in my house rather than in the office. But there's not really. I think we're past the point of like this is new for us. We should all be kind of seasoned pros at having a virtual meeting via video.
Awesome advice. Awesome advice. Cool. So with that is officially wrap To the panelists, Keith, Angela, Conrad, you all rock. Dubs, my man, thank you, sir. Thank you all. Nicole, thank you so much for your help in just getting everything coordinated. To all the attendees, you all rock. I guess my silver bullet, and I didn't even plan this, might be a little not great, but join the next one. Preferred return. I think this is the start of something cool. I think just the traction that we got right out of the gate shows that there's a huge appetite for this type of thought leadership, and that this is a big community of folks that want to help each other be better every day. And so this is the first of many, and we're super committed on the Alt-Via side to continue to provide this or be a conduit for it. So stay tuned. In terms of next steps, we have a survey that'll be going out. We're totally eager for feedback. Again, early days here, so we want to iterate as much as we can and get better. And then hit us up, Dubs and myself, if there's an opportunity for us to be helpful on the topic of technology and how it can support fundraising motions and perhaps the whole digital transformation process to get you to a place where you can be a little bit more nimble in these business conditions. And with that, thank you all. Have an outstanding day. Have an outstanding weekend. And we'll
Thanks, guys.
Thank you.
All right, thanks, guys. Take care.